So the RBA left the cash rate on hold today, as I expected, at 4.25%. A little bit embarrassing for those calling a rate cut in February, and then one or two economists also arguing for a cut today. It didn't happen. Having said that, the statement by the RBA was actually quite dovish, not surprisingly, and in a sense predictable. The RBA, as I argued previously, once again clearly communicated that it will wait for the first quarter inflation data, which will be available in a few weeks' time. And then once it has that inflation data, it's going to reassess the level of rates and the stance of policy. It has set up and reaffirmed the previous decision rule, which is that if inflation is benign and they feel that they can cut rates without stimulating inflationary pressures, then that's precisely what they'll do. All really hinges on the CPI print on the 24th of April, I think, and there's no doubt that the market will start pricing in substantial probabilities of a cut in May. For the housing market, that's obviously good news because there certainly is a chance the RBA will reduce rates a little further. The other, I guess, points of note, the RBA is juggling the multi-speed economy and interestingly notes that growth in Australian domestic demand last year ran at its fastest pace in 4 years, fueled by private spending. Having said that, the RBA concedes importantly that growth in output has been a little weaker than they had previously assumed and is slightly below trend. They also draw attention to the fact that the unemployment rate has been stable, hasn't really moved for quite a long time, and finally that we risk seeing an increase in inflation unless Australian productivity improves. So in summary, we could be looking at a rate cut in May. I'm not personally forecasting that at this point in time. As expected, no change in rates today. Thank you.